Before we proceed, please hit that subscribe button for more educational content like this. Who can you claim as a dependent on your tax return? Let's talk about dependents. No, not just your pets. Imagine this, you're filing your taxes, and you suddenly think, can I claim my dog as a dependent? I mean, he eats my food, lives rent-free, and relies on me for everything. Unfortunately, the IRS doesn't see it that way. Bummer, right? But don't worry, today, we'll break down exactly who you can claim as a dependent so you can maximize your tax benefits and avoid IRS headaches. Stick around until the end, you might be surprised at some of the rules. Who qualifies as a dependent? The IRS allows you to claim dependents under two main categories. 1. Qualifying children. 2. Qualifying relatives. Let's dive into what these mean and whether your favorite cousin who crashes on your couch actually qualifies. 1. Qualifying child, not just your own kids. Claim someone as a dependent under this category, they must meet these 5 criteria. Relationship, the child must be your son, daughter, stepchild, foster child, sibling, step-sibling, or a descendant, like a grandchild or niece/nephew. Age, they must be under 19 at the end of the year or under 24 if they're a full-time student. If they are permanently disabled, age doesn't matter. Residency, they must live with you for at least half the year. Sorry, your cousin who visits for a week doesn't count. Financial support, the child can't provide more than half of their own financial support. So, if they pay their own rent, buy groceries, and are living their best independent life, nope, not a dependent. Joint return rule, they can't file a joint tax return with someone else unless it's only to claim a refund. If someone meets all these requirements, congrats! You can claim them as a dependent. 2. Qualifying relative, it's not just blood relations. Not all dependents have to be your children. A qualifying relative can be parents, grandparents, siblings, aunts, uncles, and even in-laws. And yes, even friends, if they meet the criteria. What's the catch? For a relative or non-relative to qualify, they must meet these conditions. They don't qualify as a qualifying child. If they do, then that rule applies instead. They lived with you all year, unless they're a close relative like a parent. You provided more than 50% of their financial support. If you and your siblings split the cost of caring for your parents, special rules apply, so check the IRS guidelines. They made less than $4,700 in gross income as of 2023. If your dependent has a side hustle, making serious cash, the IRS won't consider them a dependent. If you've learned something new so far, hit that like button. If you're still confused, drop a comment with your questions and I'll help you out. And don't forget to subscribe so you never miss tax-saving tips that could keep more money in your pocket. Common mistakes people make. Mistake number 1, thinking you can claim a roommate unless you provide more than 50% of their financial support. They're just a freeloader, not a dependent. Mistake number 2, assuming an older child still counts. If your child is 25, working full-time, and paying their own bills, you can't claim them anymore, but you can still love them, of course. Mistake number 3, not realizing some parents qualify. If you financially support your aging parents, you might be able to claim them even if they don't live with you. So, who can you claim as a dependent? If they rely on you financially, are closely related, or live with you all year, and meet income and support tests, you may have a tax break coming your way. Want to save more on taxes? Hit that subscribe button. And if this helped, share it with a friend who needs to get their tax game on point. Have a tax question? Drop it in the comments, and let's chat.